This is the trade that I took yesterday, and as you can see, it is a nice 1-to-3 restore ratio. If you want to start taking trades like this every single day, then you'll have to look at multiple time frames to take that perfect trade. And I will teach you how to do that in this video, so pay close attention. This is exactly what you will learn in this top-down analysis full course. First, you'll learn the basics. What is top-down analysis? That is really important for you to actually start. And then you'll learn why should we actually look at multiple time frames instead of one. And obviously, you'll learn how to make money using top-down analysis. I made $1,000 yesterday from the trade that I took. So obviously you'll make a lot of money from this too. And in the end, I will reveal my profitable top-down analysis trading strategy that only the 1% can get access to, because most of the people probably already clicked off because they're dopamine and etc. But I promise you, if you cannot focus till the end of this video, you shouldn't even start trading, because trading is something that you have to have full focus, and you need to cut out all the distractions, and literally you just need to be patient. So literally this is a test for you and your patience, and obviously you'll learn how to make money the way I do every single day. So right here you may wonder like, oh, that's a nice trade. You probably just looked at this 1 minute time frame and just took it. No bro, that's not how it went. I started all the way from the daily time frame, and here I saw the overall bias, and I will teach you how to do that. So you may wonder, what is top-down analysis? Top-down analysis is literally analyzing the charts starting from the higher time frames, and then we'll move down to the lower time frames to look for the entry, and then we'll make money. And the reason why we actually do that is because in the higher time frames we can see the overview, we can see everything that will most likely happen in that day. But in the higher time frames we cannot just enter, because it would be so huge trade, it would take days and days. So what we do is we see the first direction in the higher time frames, and then we move down to the lower time frames, and then we look for the entry going to the same direction that the higher time frame went. Most of the people, most of the retail traders, they would be like this. Oh, we're actually trending down. I don't want to miss out on this trade. We're trending down. Oh, here's a lower high. Here's a lower low. Let's enter straight from here. Let's go. Let's go. Let's go. Let's go. Boom. And they would have gotten stopped out from here. Guess why? I was already ready for this. I was already ready for this weeks before. Look at this. If we go down to the daily time frame, we can literally see what happened. Here's a draw in liquidity. This is a little daily time frame low, which has massive amounts of liquidity. Let me show you in the 4-hour time frame. This is a literal draw in liquidity. Draw in liquidity is liquid cash that banks, institutions, and even hedge funds, the whole market movers, are going towards, because there they can literally take people out from the market, and also people are entering the markets. And when these kind of places get hit, it has a 95% of chance that the price will actually go to the opposite direction. In my 3.5 years of trading, I've seen this even thousands of times. Okay, so you have to believe me. Okay, so these big banks, they see, okay, massive amount of liquidity get hit, we must change the direction. And that is exactly what I did. I marked out this super high time frame liquidity area. The market opened here yesterday. I didn't want to enter shorts because we were so close to this liquidity area. So I didn't want to enter, because what is most likely what's going to happen after the liquidity sweep, the massive amount of liquidity that get hit, the price will literally go to the opposite direction, like I told you. So I'm patient, I'm waiting for it to get hit, because I know these big banks, they want to fill orders by taking out liquidity. So I'm waiting for that. Once I see this daily time frame low, 4-hour time frame liquidity get hit, guess what then? I go down even to the 1 minute time frame. That is what I call the top-down analysis. I go to the 1 minute time frame, literally, because that is so huge amounts of liquidity that got hit. When these liquidity areas get hit, remember, people are getting out from the markets, millions of people getting stopped out, also millions of people entering the markets, and a lot of money is getting into the markets. That means the volume, the movement of the price will significantly increase. So we can literally see that these are the small candles. Immediately when this gets hit, these candles turn big, and big. They just start to move. First sign that I see is a rejection from the liquidity that got hit. We see that the price broke structure, and I didn't enter immediately, but I wanted to see another break of structure right here to see that the trend has started. So guys, if you know something about the trend, how does the price move? Uptrend, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Downtrend, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. That is how the price moves always. As you can see, this is a downtrend, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Liquidity got swept, broke structure. This is the first higher high, then lower high. And right here I entered. This is another higher high, which we broke structure again here, entered buy positions and stop loss above this mini liquidity area, because this is also a nice 1-to-3 restart ratio. Boom, entered, perfect trade. And here you literally saw me going from 4-hour time frame and daily time frame all the way down to 1 minute time frame. Literally, you just saw that. And because I did that, I was able to catch this perfect trade, because it would be impossible literally for me to go to the daily time frame and we see the liquidity get hit and just enter buys right from here, because that would be just dumb, because the price could continue down. But we wait for the reaction in the lower time frames, which we literally saw in the lower time frames that, first of all, the price hits the liquidity area, the liquidity range. We see immediate reaction and rejection from the candle. It starts to go to the opposite direction immediately. Then we see the first break of structure, and then we see another break of structure. We see the trend forming up. And guess what, guys? Like I just told you, how does the trend move? Higher highs, higher lows, 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 etc., etc. That's how we know we're gonna make a lot of fucking money. And guess what happens, guys? Look how far this went, because this was so high time frame liquidity. But guess what? This is good for me. 1-to-3 short ratio. This made me over $1,000, because I know when to risk a little bit more and when to risk a little bit less. And in this case, I risked a little bit more just because how good this trade was about to be. And as you can see, I entered from the lower time frame, and I didn't enter from the daily time frame that the liquidity got swept. I entered from the 1 minute time frame, because that's called top-down analysis. You see the overview from the higher time frame. I saw it way before that. Okay, I saw it way before that. I was ready. I go to the 1 minute time frame. Boom. Okay, and that is just one example. Let me show you more. And here's a second trade that I took the day before. And the reason why I show you like this from the trades that I took, because I'm not one of those gurus who just place random ass trades and just use the replay mode. No, bro, I am teaching and showing you from my experience. This is literally my experience. And here's the proof. This is yesterday. I entered from here. I sent out the signals. I was also live trading, and boom, this was the final. And as you can see right here, boom. You may wonder, like, again, wait, you took it from 1 minute time frame. What? But if you just paid close attention recently, I told you that I entered from these lower time frames for a reason. Let me show you at the daily time frame. I literally saw this a mile away before this. Like I just told you, how does the trend move? In downtrend, it moves like this: lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. In uptrend, it moves like this: higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And in this case, it moves down, so lower lows, lower highs, lower lows, lower highs, etc. Right here, we can literally see this. We are bearish because we broke structure right here to the downside, and we're bearish now. We can see that this is literally quite perfectly aligned. So we can see, how does the trend move again? How did the trend move again? We broke structure, so lower low, lower high. What is most likely what is going to happen? Lower low. And what is most likely what's going to happen now? Lower high, lower low, etc. So we were here. It was around here, and the market opened. I was like, okay, lower low, lower high. Most likely it's gonna go down, because that's how it goes. That's how the trend moves. Okay, this is the higher time frame. So we can see in the higher time frames too that the trend is forming down. So now we want to see reaction to the downside in the lower time frames to look for the entry and make a ton of money. So let me show you. In the forward time frame, same thing. We were bearish. Okay, here we retrace a little bit up, but we broke structure again to the downside right here. I know it looks weird. Sometimes the price does like this. But this is a break of structure, and this is a downtrend. Okay, we go to the even a lower time frame. We can see that if we go to the 50-minute time frame, I remember I went to the 50-minute time frame. I remember. So the market opens. We can see the market opens here, and immediately when the market opens, we can see that the trend is nicely aligned. And as you can see, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. And here's a little bit consolidation. We don't care because the market wasn't even open. Lower lows, lower highs as soon as the market opened. Lower highs, and we know it's gonna go down because the market is bearish and moves in a trend always. So in this case, here's a fair value gap that I marked out in the middle of these candles. Gets hit perfectly when the market opened. What do? I use these lower time frames to look for more confirmation, and here it does. So in these lower time frames, this is a 5-minute time frame. We can see that more confirmation will come because this is the 50-minute fair value gap that got hit. This is a lower low, this is a lower low, lower high in these higher time frames, and here in the lower time frames, we see a break of structure to the downside on the 5-minute. That is good. That is good. But I'm not satisfied yet because that is only a 5-minute break of structure. I want to enter from 1 minute, but 5-minute gives us more confirmation. Okay, so here it is, 5-minute break of structure to the downside. Boom, perfect. What do I mark out? What do I mark out? I mark out this 5-minute fair value gap right here. Boom, which slightly get tapped into just a little bit. What do? I go to the 1-minute time frame. This is the last time frame where I look for the entry only. In the 1-minute time frame, let me remove this. We can see the fair value gap in the 5-minute gets hit. 1-minute time frame, we see that the price will continue down. And why do we even have the 5-minute fair value gap? Because we can use it as our advantage to see the lower lows, lower highs. So in this case, lower lows, lower highs, and then I'm gonna enter. Okay, so I go in, I see last break of structure to the downside. Boom, I enter from here. This is a break of structure right here, this line, and this black candle closes below the most recent low. And this is a break of structure to the downside. I entered, I send out the signals, and I'm talking to the camera as well, talking to my Discord members at the same time. And then right here I entered. So as you can see, this is a nice, beautiful trade. And where did I target? Why is this trade this size? Because in this case, if you go to the 15-minute time frame, so this is the take profit. This is the only take profit that we had. So we made a lot of freaking money. And right here, we go to the 1-minute time frame. We can see that the trade was beautiful indeed. Right here, boom. Right here, beautiful. So as you saw, I didn't enter from the higher time frames. I only used as the higher time frame to look and see the overview of the upcoming day. Daily bias, and then we see the daily bias. Let's say the daily bias is going up. We see that the higher time frame is going up, and we see that there's a lot of momentum and potential to look for buys in, for example, in the daily time frame. It's going up. Then we just move down to the lower time frames, and then we just have to see more reaction to the upside in this case, and then we enter and make a lot of money. I promise you, people would pay thousands for this video. Okay, so you're lucky that you even came up into this video. Okay, so subscribe, and if you want to trade live with me every single day and join the free Discord, here it is right here. Join up. Peace out.